If you had a choice between improving your gross profit margin or increasing your sales, which one would you pick and why? Welcome to another episode of Ask gHawk Accounting. My name is Lena Oduo. I'm a chartered accountant, business coach, and founder of gHawk Accounting. This is a real-life question that came up recently in a business review meeting. It's a trick question because increasing your sales and improving your gross profit margin are both very good strategies for growing your business. In today's episode, I'm going to be talking about one of the most often ignored numbers in business, which is your gross profit margin. Turnover or sales might make you feel good, but it is the gross profit margin that tells you whether your business is truly healthy, and I'm going to show you why. So let's start with the basics. What is gross profit margin? Gross profit margin is the percentage of sales left after you've paid your direct costs, things like materials, labor linked directly to projects or subcontractors. The formula for gross profit margin is simple. Sales minus direct costs divided by sales times 100. That gives you your gross profit margin as a percentage. Here is why it matters more than sales. Imagine two companies. Company A has sales of £1 million and Company B has got sales of £600,000. Company A has a gross profit margin of 15%. That means after direct costs, they keep £150,000. Company B has got a gross profit margin of 30%, which means after direct costs, they keep £180,000. So even though Company B sells less than Company A, they actually have got more money left over to pay for their overheads and make a profit. That is the power of margins. The danger of having low margins is that you constantly feel like you're working flat out but never moving forward. This is a trap many businesses fall into. They focus on chasing revenue instead of making revenue that they already have more profitable. So how do you go about solving this? If it's your business and you're in such a situation that you've got sales coming in, but you're not profitable or your gross profit margin is very low, the first thing you must do is to set a target. Every industry is different, but the principle is the same. Know your target and measure it consistently. For example, many service-based businesses should aim for a margin of at least 25 to 30%. That gives you enough headroom to cover your overheads and still generate a profit. The key is not just hitting your target once, but keeping it consistent month after month. And that is where you need to keep a close eye on your numbers and review it constantly. Here are 5 practical steps that you can do to improve your gross profit margin. Step number 1 is to improve your pricing. Review how much you're charging and check that you're charging enough to cover the rising costs. Costs have gone up due to inflation and the cost of doing business generally, but most business owners have not taken the time to review their costs, which is eating into their gross profit margin. Second thing to do is to track your profitability on each job or project. Not just waiting for the year end, but as the project goes on, get a software that allows you to allocate costs per job so that you can review how each job is progressing and to make sure that you're not spending more than you've billed your customers. Step number 3, as you are reviewing your projects, if you find that you still need to spend more costs, but these have not been taken into account in pricing the job, make sure that you have a discussion with your customer before spending this extra amount and agree to charge them for the extras that have been incurred. Fourth thing to do is to cut out waste. This could be unrecorded materials, missed billing hours, inefficiency, expenses that are not relevant to the job. Just cut it all out and improve on your processes to make sure only the expenses that are necessary to produce the project at the quality that your client requires are included into your project costs. And finally, stop underpricing just to win the work. So Growing sales at a low margin is like filling a bucket with holes. It will never hold water. You just keep filling at the top, but it's going straight out through the bottom. And that's not helpful. It just creates a lot of work and a lot of stress, and you haven't got the results to show for it. Those are my 5 practical steps to help you improve your gross profit margin. My challenge for you today is to look at your gross profit margin and check if it is what you want it to be. And if you do, ask yourself whether you're happy with it or whether there's anything you could take out of this video to be able to improve your gross profit margin going forward. Now, let's go back to the scenario we started with. If you had a choice between improving your gross profit margin or increasing your sales, which one would you pick and why? What is the right answer? I've got my opinion. It depends on the value of your gross profit margin. If you are happy with your gross profit margin and you want to grow your business, then absolutely bringing in new sales is definitely the way forward, because you're building on a foundation that's already stable, and it means that for every sale that you bring in, you're very clear as to how much you're spending on direct inputs and how much is remaining as a contribution towards the profits of the business. If, on the other hand, after looking at the gross profit margin, the figure is not what you expect and you're not happy with it, I would 100% recommend spending time reviewing the gross profit margin and looking at strategies to make sure that every sale you bring in has got some money left over to contribute towards the net profit of the business. At gHawk Accounting, we've created tools like our finance health check to help business owners see exactly where the numbers might be slipping. You'll find the link to this worksheet in the description below. Take them, get an idea of how your business is performing, and we'll be able to get back to you with your results and how you can improve on your finances. Remember, sales are important, but margins are everything. Get your gross profit margin right, and your business will always have a stronger foundation. Thank you for watching this episode of Ask gHawk Accounting. Don't forget to like, subscribe, and share this video with another business owner who needs to hear it. See you next time.